Morning, this is John Payne, host of Real Estate Radio Bay Area, and this is the RateWatch Now Daily Update Report. Let's go ahead and jump right into this. This is a snapshot of the mortgage-backed securities market yesterday. We started out okay. 30-year auction took place. Wasn't a very good auction, to say the least, and you can see how the market reacted to that auction. What's going to make rates go up today? We have retail sale numbers out. The number is up, but it's not as good as it was last month. But this month it was up 0.4%. But prices are falling as well, which leads into the fear of deflation. And I'll show you a little bit more of that in a minute. New York Fed manufacturing survey was through the roof. It was really, really good. A lot of positive thoughts on manufacturing sector right now. And remember, it's manufacturing, jobs, as well as housing that's going to pull us out of this economic dismal that we find ourselves in. So at least manufacturing is holding up its end of the bargain. Rates go down today. We have Bernanke comments. What more can he say? He is going to buy securities. His logic is that it worked the last time, so it should do the same this time. And he's even talking about dollar amounts now. He's talking up to upwards of $500 billion in buying treasuries over the next couple of months. Now, remember, the last time he did this, it was 1.25 trillion in mortgage-backed securities, and rates dropped a full percentage point. So I would assume that that same scenario would play itself out. If he's investing money, we can probably see rates drop down to the mid threes. CPI, you know, CPI, you don't need it to be too high, you don't need it to be too low, you kind of need it to be just right. Now, this is showing low inflation, the CPI number is, which is ushering in deflation fears. So the whole thing about deflation is, why would I buy products now if I know prices are dropping? Wouldn't I just wait? So that will be sluggish on the economy as well. So we have to be mindful about that as well. Also, the Michigan Consumer Settlement, I can only put this one way. Consumers are very upset. We are at the lowest point right now in this administration than we were at the lowest point of the previous administration. Now, I'm not trying to give any political views. I'm just telling you what the numbers are showing, and I'll show you that in a moment. Here is a core retail number. You can see that's very, very volatile. Um, it's not great. It's not bad. It's just there. More importantly, though, you look at the consumer sentiment, Michigan consumer sentiment numbers, and you can see that we are way down here in the 60 percentile. And if you go back to the last administration, we're lower than they've ever been. So this is not very good. Consumers are very upset about what's going on. And I think that the hope of this administration being able to pull this out is probably going by the wayside. Then again, this is not a political comment. I'm just stating what the numbers are telling me. And CPI, you can see CPI is not too good, not too bad. We're actually lower than we've been since we've been in this recessionary period, and that's what this line here indicates. So we're lower than we've been in quite some time. And again, this is bringing in fears of deflation. So something's going to have to be done, and I think that's why Bernanke is talking the way that he's talking to help stabilize the economy. Here's how the market has been reacting so far to the fundamental news I just went over. We started out on a low. People started to just look at what Bernanke was saying, and here we go. We started to move up again in the right direction, at least for bonds. You can see lenders, how they're reacting. Here is a snapshot of the actual trading. I kind of anticipated maybe that we would break through this trend line yesterday, but I underestimated how strong this trend line is. We have a good opening though, however, and it's very positive. Now, I don't know if we have enough steam in the news today to push through this trend line, but I do believe that we're here. One thing that is really good is that the par 80 tends to be a very strong support for us. So that's tested, and I think that's going to hold for a while. In summary, Bernanke is not holding back, and I'm surprised that the market is at this point. Inflation is tame, but is it too tame? And retail sales are pretty good, but perhaps based on lower prices. And consumers are really bummed out. We again held the par 80, which is key and further defines the range that we're currently in. And our trip to the top of the range was broken by the 30-year auction yesterday. And there is not much left to hold us down now. So the only way we can probably go is up. All I have for you today, Bay Area. Make it a great Friday. Have a great weekend. Remember, not this Saturday, next Saturday, I will be hosting the Real Estate Radio Bay Area on Fox News Radio, 9:10 a.m. from 12 to 1. Check me out. Have a great weekend. Until Monday.